Get to the first company on our radar, and that's a new IPO, Rashi Peripherals. Now, the company is a pan-India distributor for global technology brands like Asus, Dell, HP, Lenovo, Logitech, Nvidia, Intel, amongst many others. And the companies had long-standing relationships with many of these marquee global brands. The products that they distribute are all technology products. They're not the consumer electronics products like your TVs, mobiles. What they distribute will be your laptops, desktops, routers, CPU, motherboards. They also now have started distributing lifestyle accessories like fitness trackers and gaming accessory. It's a large company, 10,000 crore of top line, but the EBITDA margins, being a distributor, are fairly thin at close to about 3%. The IPO opens today. They're looking to raise about 600 crore rupees, which will be utilized for debt repayment and working capital. To talk more about this company, we now have Kapal Suresh Pansari, the managing director of the company, and Rajesh Goenka, the CEO, to take some questions.
Hello.
Gentlemen, thank you very much for joining in. So we've given a backdrop, to our viewers about the company. So let's straight away dive into the financials of the company. In the RHP, you've said that the company has been growing at about 20% over the last 2 to 3 years. But FY23 top line growth was just 1.5%. So can you explain what happened in FY23? Why did the growth rate dip? And going ahead, can you sustain your long-term growth rate of 20%?
Yeah, I think, Seema, first of all, thank you so much for having us. And you've done my 50% of the job already, giving a good brief. So basically, last year, we are more in flattish in terms of top line. Simple reason was previous 2 years were COVID years.
Okay.
And at that, the IT demand for work from home, learn from home was very high. And the market grew by about 25-30%. But Rashi Peripherals, we grew at 53%.
Okay.
So after 2 continuous years of 50% growth, there was some correction in the industry and the oversupply situation. As a result, we are more flattish. Actually, the market went down by 20% and we are flattish. So indirectly, we've continued to...
So the long-term growth rate on the top line of the company has been 20%, Kapal. And are you confident that this will sustain?
Yeah. So last 20 years, our CAGR has been at 23%.
Okay.
And we've...
20 years?
20 years, 2
and
decades
the
of performance.
market in this period would have grown at?
A single half of this growth. What also we can tell you that this market, after this correction post-COVID, is now settled and is coming back to the normal growth trajectory. And all third-party industry report mentions that this market will continue to grow at about lower double-digit number.
Okay.
So with this growth, we'll continue to outperform. And we hope to see that, though I have regulatory purposes, I cannot give you a number, but I can confidently tell you that we are
hope to outperform the market.
I want to go beyond numbers to talk about business strategy because, as Rima's been pointing out, the nature of business that you're in, it's between 2.8% to 3%, that kind of margin. That's the nature of the business, right? Yeah. And I believe that online retail obviously is a huge, it's an opportunity and a threat. I suppose there's a lot of competition out there. So what is the business focus and trajectory going forward with respect to opening more warehouses, stores, basically, brick and mortar presence versus your online presence? And in some way, can you sort of look at ways of shoring up the margin beyond 3%?
Yeah, so I think to start with, we are very confident to maintain our trajectory of 23% growth of last 20 years. With the simple reason, one is, as Kapil mentioned, the market is growing by double digit. Second, every second year, third year, we get into newer verticals, newer products and newer solutions. A specific example that I can give you is about enterprise business, which we got about 4 years back. In enterprise business, we basically sell solutions of server, storage and artificial intelligence. Fortunately, last 1 year, everyone is talking of AI. So by virtue of that AI and the demand with so many AI data centers coming up this year and next year, we have a huge business opportunity there.
And how does the margin compare between the regular peripherals business or the laptops business and this enterprise business?
In the IT industry, in general, the margins are more flattish. And it's a relatively safer business. So the scope of margin going down and up is relatively lower, is what I would say.
So margins would be comparable with enterprise, but it will obviously add to your top line.
Yeah, exactly. So this is basically an optimized margin scalable business model. Margin percentage variation down or up will not be there. But as long as we keep on scaling the business as we have been doing at 23% CAGR for 20%, will keep on generating more cash.
And
Okay,
couple the
let's,
point on online, offline, just because I mean, these days, if you're looking to buy a laptop, you wonder yourself, there is the the comfort of going to a store, having someone explain the features to you. But I think that's for old-fashioned people like me, because most others are simply just going online and looking for the best discounts.
Yes. So you're absolutely right. Online has been a very important go-to-market strategy that has developed over the last couple of years. But IT in general, if you look at the product category, it is a consultative sales. Every user will have a different need based on their size, capacity, the storage, the performance of the machine that is required. And even after you've bought that, there is integration in terms of network, servers, configurations, etc., which a human normal user in the country cannot do.
Unless they're a Gen Z or maybe a millennial.
Yeah.
Absolutely. So that's why there's a go-to-market strategy. We service all three categories: the general stores like mom and pop, the old-fashioned stores, traditional retail. The second is large format retails like Croma, Reliance, Vijay Sales of the world. And the third category is our e-commerce from Flipkarts and the Amazon marketplaces.
So break up your revenue into these three formats, and which one is growing faster?
Yeah, so overall 70% of our business is coming from the general trade partners.
Okay.
About 9 to 10% business is coming from modern trade, which is likes of Reliance, Croma, all these large chains. And 20%, to answer your specific question, is coming from e-commerce. So e-commerce is not a competition to distribution company like us, because they also buy from us.
Got it.
So for us, all the three segments which reaches the end customer or a corporate or an enterprise, eventually they buy from us.
Because you're a B2B player
We are a
and
B2B,
not a B2C.
yeah.
Just one quick question. You're raising 600 crores, which will be used to pare down your debt. So what's the current debt on the books, and how much does it come down to? And will your PAT margins go up? Because now your financing cost reduces.
Correct. So currently what we are raising is 600 crores. We recently closed our pre-IPO from Voldorado and Madhuri Kela, which is Madhusudan Kela's wife. And our anchor book, out of 600 crores, 180 crores have been fully subscribed from White Oak, SBI General, Birla Life, etc., etc.
Okay.
Right? Out of this, almost 150 plus about 325 crores will be used to pay off the debt. And the balance will be used to pay off our creditors, which will significantly increase our buying capacity from our suppliers as well. By reducing this, our current debt is about 1390 crores, which will come down by almost half now after this capital raise.
Okay, all right, gentlemen. We have more questions, but we're a little short on time. But
I
now,
just want to give one liner for your viewers as well. So Rashi Peripherals is a 34-year young company doing 52 global brands. We are physically present in 50 cities of India with our office and warehouse. And we currently sell to 8,400 customers in 680 towns of India. That's our core strength and penetration. And our aspiration is to keep on growing this and bring more and more IT products to the Indian users.
well, you're in a sector
that's
where demand is absolutely no problem. It
And
will
that
only go
qualifies
one way, and
as,
that's up.
that
Yeah, that's why I
qualifies
said
as an
that.
elevator pitch now, the perfect elevator pitch. Thank you very much, Rajesh and Kapal, for joining in. Well, we need to slip into a very short break on that note. We'll